Hi everyone. First of all, please confirm me about the audio and video quality. Hi everyone. Good evening. I hope I'm audible. I hope screen is also visible. So now with this, let's start today's session. So hi everyone, my name is Aarti Pathak and welcome to JIB CIB English Medium. As you know, now our main target is JIB November 25. So for that, we officers under 24/7 already launched one series known as Target series. Okay, so this is your AFM series where we are going to cover your concepts along with the MCQs. So remember, though this is not a fully coverage of your module unit wise, but I can assure you that this is your just a quick summary review. Okay, if you want to start your AFM and if you want to practice some MCQs based on that topics, then this series is fruitful for you. But don't just depend on this series, because here we cannot complete each and everything in this limited period of time. Okay, but for sure, if you want to do the revision, if you want to start your preparation with a quick kind of topics, then this is perfect for you. So what you can do right now, you can subscribe to our channel, as well as you can share this particular channel with your friends and colleagues who are planning to give JIB as well as CAIIB. So after this, let's start this session. As you can see that today's first AFM Module A, Unit 1, we are going to start with definition, scope and accounting standards including Ind AS. So basically here we are going to start with your accounting. Now we all know that everyone is not from accounts background, correct? So things are very complicated for everyone right now, whether you are or whether you are not. Because if you are from a commerce background, so it's been ages, okay, where you have covered the things, but now it's totally so much of time that things are very blur. And if you are from non-commerce background, then things are totally new for you. So I can take one guarantee from this series that yes, this will help you in your basic understandings, okay, but not as a level of JIB, because these things are very quick and these things are very basic things which will help you in your concept building. So let's start today's session. But before we start, let me tell you, first we are going to understand about the accounting. Okay, what is this accounting? Where we use this accounting and what is the actually use of this accounting is what actually your first unit talks about. So let's start with an example. Suppose, as you can see, Mr. Bean, everyone knows him, correct? So now Mr. Bean wants to start one business known as the chocolate factory. Correct? This is an example where Mr. Bean wants to start the chocolate factory. Now, can you tell me what is the first thing Mr. Bean requires when he thought of starting this business? What is the first thing? Though he got the idea, let's start the manufacturing of chocolate factory. Okay, I will purchase this raw material. Okay, I will purchase that land. I will purchase this building. Okay, I will employ this many laborers. But what is the initial thing that Mr. Bean needs to arrange? Can you tell me that thing? Tell me. What do you think? What is the first initial thing Mr. Bean wants before he starts his business? Can anyone tell me? What is the first initial thing? Let's take a guess. How many of you can tell me the correct answer? Anyone? Hi, Sandeep sir. Can you tell me? What is the first thing Mr. Bean wants before he starts this factory? Though he got the idea, yes, exactly. That is cash. That is money. Correct? Without this, you cannot start even a single business. Correct? So, to implement your thought, to implement your business, we require the first and the foremost thing. That is your money. That is your cash. Correct? Now, with the help of this cash, Mr. Bean will do what? Mr. Bean will purchase raw materials. Yes, because starting one chocolate factory requires the raw material. So what Mr. Bean will do? Mr. Bean will use that cash for purchase of the raw materials. Suppose he purchased 10,000 raw materials. Correct? This are the raw materials, and Mr. Bean purchased around 10,000 of raw materials. Now with this raw materials, he will do what? He will do the processing. Correct. He will convert it into chocolate, but before converting, he requires machine, he requires labors, he requires electricity and so many other things. So during the processing, suppose he pays labor payment 5,000, electricity payment 2,000, packing charges 1,500. Correct. So what is the scenario right now? Let me revise it again. Here's a Mr. Bean who wants to start one chocolate factory. For that, he requires cash. Okay. He arranged the cash. Now with this cash, he first started with the raw material purchase. Now with this raw material purchasing, he'll start doing the manufacturing, processing. Correct. And finally, after this processing, he will get this chocolate. Correct. And finally, Mr. Bean can sell this chocolate to their customers. So as you can see, in all the processes, there is some monetary amount, some monetary value. Okay. So what Mr. Bean will do? As Mr. Bean will do this process on a regular basis, he will purchase raw material, he will do the processing, he will sell to the customers, correct? Again, he will purchase the raw material, he will do this processing, he will sell the chocolates. This is a continuous process, continuous process. During this process, Mr. Bean will pay to this labors, correct? Electricity payment, water supply payment, correct? So many registrations he will take from the government. So there is a continuous flow of this cycle. But Mr. Bean cannot record all these things here. Yes or no? He cannot record each and everything. Because initially things are very small, but gradually things will become very large. So recording here is not possible. At the end of the day, he wants to know about the profit also. Correct? Because as a businessman or as an individual, what we want? We want profit. We want surplus in our money. Then only we will continue our business. Otherwise we will shut down it. If we face continuous losses, if we are not earning in a profitable way, so what we will do? We will shut down our business. Correct? So remember one thing, that every business wants to earn profit. But how to calculate it? You can calculate it only after analyzing all the cost, all the expenses, all the incomes, and whatever the difference you are going to get, that is your profit or loss. But how you will calculate it? You will calculate it with the help of your record, with the help of your book. Because everything you cannot store here. So what you will do? You will make this kind of records. Okay? These kinds of records, where you will record all your expenses, all your cost, like all your cost, okay, plus all your expenses, while processing, while payment to electricity bill. After that, you will record all your sale. And finally, the difference will give you either profit or loss. So for every business, when you are recording cost, expenses, sale, income, gains, and after that when you are calculating the profit and loss, this whole thing is what accounting is. This is what accounting is. Correct? So accounting is what? Let's give you a quick definition of accounting. Accounting is an art of recording, classifying and summarizing in a significant manner in terms of money. Remember, only when you can measure in terms of money, you are going to record. First thing, you will identify. You will identify what are the things you are incurring in your business. You are purchasing raw material. You are giving salary. You are giving payment to this electricity, water supply, printing and stationery. You are purchasing land, building. Correct. After that, you are selling your goods that you manufactured. So all these things are giving you money. So whatever things in your business is providing you money, or you can see there is a financial transaction, you are going to record it, you are going to classify it, and you are going to summarize it. The initial thing in your accounting is recording. After that, you proceed towards the classifying. And finally, you make the summary. So under this summary, you prepare profit and loss account, balance sheet. Correct? And under this accounts, you will show all your monetary transactions, all your transactions, events which you can reflect in terms of money. Money doesn't mean only Indian rupees. Okay? It can be your dollars also, any foreign currency also. Then, in part of at least of financial character and interpreting the results thereof. Because after this, you are aware whether you are earning profit or whether you are into a loss. That is what the final result you are going to get with the help of the accounting. So what is accounting? Accounting is often called as the language of business. With the help of accounting, you can identify, even no one is saying that whether we are earning profit or we are incurring loss, you can understand that this business is into a profit. See how? Let me give you one example. Suppose I am saying, okay, I am saying that in my business, I have sales around rupees 15,000. For this sales, I incurred cost of around, let's assume, 7,000. This is what my books are showing. Okay, this is what my accounts is showing you. Tell me now, what do you think? I'm into a profit or into a loss? Let's see how you can identify it. I'm not saying whether I'm in a profit or I'm in a loss. You are just seeing my book. Okay, this is my accounting, and you are identifying that 15,000 is my sales and 7,000 around is my cost. So tell me now, whether I'm in a profit or I'm in a loss? Tell me, what you are going to understand with this? With the sales and the cost? What you are going to interpret with this? Tell me. You are going to interpret that your sales are around 15,000, but for that 15,000, you incurred only 7,000 cost. So means you are into a profit. Hana? You are into a profit. That is what you are going to analyze with the help of accounting, even when no one is talking about. Okay? Even if I just provide you my accounts and this book, you can identify that yes, this business is in 8,000 profit. That is what accounting helps you in. So this is the basic definition of accounting, where you are going to record the things, you are going to classify the things, you are going to finally summarize the things, and only monetary transactions are recorded. Correct? So this is the basic definition of accounting. Chaliye. Now, the next three important terms, that is your bookkeeping, accounting and accountancy. So when you start this, when you start recording your transactions, see, transactions can be any transaction. Okay, like what? Like in this example, if I take the Mr. Bean example, okay, so Mr. Bean purchased this raw material on a daily basis. Mr. Bean purchased the machinery, okay, but once in a 10 years or in a 5 years, machinery, he employed the laborers, correct. He is doing this selling of the chocolate. So this all will result into a transaction. This all will result into a transaction because there is a money flow, because there is a flow of money. Okay? Flow can be anything. That can be inflow, that can be outflow. In banks also you have seen their deposits are coming, loans you are giving. So that can be inflow, that can be outflow. Okay. Transaction includes both the sides. But remember one thing, you need to measure in terms of money. Money can be anything. I'm not saying always and always Indian rupees. It can be in any monetary value. Correct? Indian rupees also, foreign currencies also. Chaliye. So if I read this again, that is your what? Bookkeeping. So bookkeeping is the first thing you are going to make. So as soon as you identify the transaction, as soon as you identify the transaction, you are going to prepare this books. That is known as bookkeeping. Under this bookkeeping, you are going to prepare two things. That is your journal plus ledger. these are the two things which you are going to prepare under this bookkeeping. The first thing, journal, and then ledger. And after that, you are going to talk about the accounting. Now, accounting is what? That is a broader term that encompasses bookkeeping, extends to more complex financial management tasks. Now, it involves analyzing, interpreting, summarizing financial data to provide meaningful insights to stakeholders. Next is your accounting. Okay, now accounting is a broader term. Okay, now accounting is a broader term where you are going to prepare trial balance, P&L account, balance sheet. Correct. And finally, when you are talking about the accountancy, that is the most widest term. Because in this, you are going to talk about the profession or a field to study related to accounting. Now, under this, you are going to see the theories, practices, and regulations that govern accounting and financial management. So, accountants who are qualified professionals with relevant education and certificates practice accountancy. Now, in this accountancy, you are going to cover the bookkeeping part also, you are going to cover the accounting part also, and finally, you are going to do the interpretation with the help of ratios. So, that is what your accountancy. Accountancy is the widest term. After that, you have accounting and then you have the bookkeeping. Correct? So, these are the three important terms under your accounting. Chali. Now, after this, let's talk about the three next important terms. That first, entity, then an asset, then liabilities. So, first, entities. Now, if I continue the Mr. Bean example, so entity is what? The chocolate factory. Mr. Bean wanted to start what? Mr. Bean wanted to start the chocolate factory business. Okay? So, this business is known as entity. Correct? This business is known as entity. Now, next term is your assets. Next term is your assets. Now, assets are what? Remember one thing, assets are any resources which you purchase, on which you control it and you own it. Correct? Suppose I purchase this TV. So, I purchased it, I own it, I am controlling it. So, that is my asset. Okay? Asset is what? Which will give me long-term benefit. I purchase land, that will give me long-term benefit. I purchase building, that will give me long-term benefit. Remember, long-term benefit needs to be there. Okay? I purchased this machine, this will give me long-term benefit. Because of these assets, you are able to run your business smoothly. So, that is your asset. Correct? So, assets are what? Any resources owned or controlled by a business or an economic entity. Then next you have liabilities. Now, suppose Mr. Bean wants to start the business and he took a loan from a bank. So, whatever the loan he took from the bank, that is what? Liabilities. Okay? So, liabilities are what? A liability is something a person or company owes, usually a sum of money. When you borrow it from someone, if Mr. Bean takes a loan from you, that is what? That is again going to be a loan for the chocolate factory. So, that is what? Liabilities. Correct? So, these are the three important terms: entity, assets, and liabilities. Assets, which you purchase, which you own it, which you have control. Liabilities, which gives you the obligation to repay it. That is your obligation. Correct? So, here I complete 4 important things. First, entity, assets, liabilities, then accounting. Under the accounting, we have completed bookkeeping, accounting, and accountancy. I hope everything is clear till here. Chaliye. Next. Now, who is the father of this account? So, the father of this accounting is Luca Di Pacioli. Remember, in exam, they can ask you direct question based on this for 0.5 marks. Who is the father? Father of accounting is known as Luca Di Pacioli. Okay. After this, Next is your origins of accounting. Now, if you see Greeks, Romans, Egyptians and Babylonians, they had well developed the records and maintained good system of record keeping and control. So initially they started the accounting part. Correct. Now, but if you talk about in India, the old method of accounting, we call it as Nama method, still in use, is also called the Mahajani, Marwari or the Desi method. These are the other names in India we use for accounting. Okay, so this is the origin of accounting. Chaliye. Now we have the accounting cycle. So accounting is what? Where you are going to record, where you are going to classify the things, where you are going to summarize the things only when it is in nature of cash. Correct? Only when it's in nature of monetary value. Correct. So we have cycle of accounting that is divided into 3: recording, classifying and summarizing. As you can see in accounting definition also we have seen these 3 terms. So recording is what? Recording is the first thing you are going to do, where you are going to prepare the journal. As soon as you are identifying there is a transaction, as soon as Mr. Bean is purchasing this raw materials, paying to the employees or purchasing any machinery, correct? When he's selling the goods, when he's doing all these things, that is creating a transaction. So first and initially he is going to prepare this journal, and that is known as recording. After that, next is your classifying. Under this classifying, you are going to talk about ledgers. Ledgers, because first thing when you were preparing journal, you recorded all transactions. Okay, you recorded all transactions. Whether you purchase raw material, whether you have sold to the customers, you have purchased machinery, whether you have paid salary, whether you have paid rent, everything you have made under this journal. Okay? All transactions recorded in just one place, but it will create a hodgepodge. Correct? It will not give you the clear idea about individual heads. So what you need to do, you need to classify into individual heads. So that if someone asks you what about the salary, you can open that salary register and you can say this month we have paid only 50,000 as salary. If someone asks you about the machinery, you can open the machinery account and you can talk about the machine only. Correct? So for that you need to classify, you need to create a separate individual registers. So that is what ledger, and that is your second step, that is your classifying. Now after that you have the summarizing, where you are preparing trial balance, profit and loss account and balance sheet. Finally, when you want to know whether the business is actually into a profitable way or loss making way, you can identify with the help of summarizing. In your banks also you are asking the documents about the businesses now. You ask about the profit and loss account, you are asking about the balance sheet. So that is what? That is the summarized thing. That is the summarized thing you are asking. Correct? You are not asking this journal, you are not asking this ledger. You are just asking the final summary of the business. Whether the business is into a loss or whether that is into a profit. So that is your summarizing. Now under this summarizing, you prepare the trial balance, you prepare the final accounts. Under the final accounts, you prepare profit and loss account. Now what all these things are? Don't worry, we will be discussing these things in our future sessions. Okay? In today's session, our main agenda is to clear what is the meaning of accounting. Correct? This is our main agenda in today's session. And slowly and gradually, we will clear all these different terms. What is profit and loss account, how to prepare it, how to prepare balance sheet, how to read this balance sheet. Correct? How to classify assets, how to classify this liabilities, how to pass journal entries, how to create journal, how to prepare ledger. But not in today's session. In upcoming sessions, slowly and gradually, we will touch each and every thing. Correct? So this is about the accounting cycle, and you can remember this accounting cycle as RCS. Recording, classifying, summarizing. Remember one thing, you cannot start with the summarizing. है ना? This is a step, this is a cycle. You need to always start with the first recording, then classifying, then third summarizing. This is the flow. You cannot change it. You cannot say classifying is the first, then recording, then do the summarizing. No, that is wrong. Chaliye. So this is about the accounting cycle. Now let's start with few question and answers. Let's check it out how much we have gained from today's session. So who is known as the father of accounting? Can you tell me? A, B, C, D. Who is the father? Tell me. Who is the father of accounting? So, the father of accounting is known as Luca Pacioli. Okay, the correct answer is option B. Luca Pacioli. Correct. Chali. Coming to the next question. What is an asset? Tell me. A future obligation of the business. B, a resource controlled by the business expected to provide future economic benefits. C, an owner's personal investment. Or D, a service provided to customers. What do you think? So asset means what? Asset means any resources, okay, any resources controlled by the business expected to provide future economic benefits. Correct definition is option B. Like when you purchase machinery, when you purchase plant, when you purchase land, okay, for your business, for your manufacturing, for your trading, that is your asset. Now, next, which statement best defines liabilities? Tell me. A, resources owned by the business. B, owner's investment in the business. C, obligations the business owes to outsiders. Or D, profits earned by the business. Tell me, what do you understand with the liabilities? Liabilities means your obligation that you need to repay. Okay, suppose you want to purchase a vehicle, you have taken a loan from a bank, so that created obligation on you to repay the loan amount to your bank as principal plus interest. Correct? So that created obligation. Or when you borrowed the amount from your friend, that created an obligation for you. So, as per this, which statement best defines the liabilities? Tell me. Resources owned by the business? No. That is a part of your assets. Correct. Owner's investment in the business? That creates the liabilities. So, owner's investment in the business is not a liabilities for you. Okay, that creates the obligation but as in capital. Now, what is capital? I will tell you in our future sessions. Okay, next, profits earned by the business. That is not an obligation. That is your earning. That is your income. So, the correct answer is obligation the business owes to outsiders. Correct? When you take loan from different entities. So, the correct answer is option C. Then, next. What is the first step in the accounting cycle? Tell me. A, classifying. B, summarizing. C, recording. D, posting to the ledger. Which is the correct option? Which is the first step in the accounting cycle? I told you, no? We have RCS. Okay? RCS. And you need to learn this accounting cycle in this only RCS. Recording, classifying, and this summarizing. So the first step in your book is recording. Under this recording, we create all your journals, okay, where we record all your transactions. That is journal. From this journal, you create ledgers. Okay. Now from this ledgers, you create trial balance and final accounts. Correct? Now under this final accounts, we create two things broadly, that is profit and loss account and balance sheet. Okay, and there is another fourth part. So the correct answer is answer C. Chaliye. Now, this is your homework question. Everyone, I want answer in our comment section. Okay, let's check it out. How many of you understood the accounting definition? So let's read it. This question: which of the following is an example of a financial transaction in accounting? A, laying off employees. B, paying cash for office supplies. C, holding a staff meeting. Or D, creating a marketing plan. Now it's a homework question. I will give the answer in our Telegram group, and you can join this Telegram group freely. You can just need to scan this QR code and you will be redirected to our Telegram group. So I will post the answer in our Telegram group so you can check whether you have understood the accounting definition or not. Correct? Chaliye. So now with this, let's wind up this session. But before I wind up in this session, let me tell you one thing, that if you want to attempt and you want to clear in your first attempt this upcoming November 25 JAIIB exam, so along with this series, you can join our paid classes also. So for that, you need to visit to Adda 24/7, all courses JAIIB CAIIB, and here is your JAIIB November 25. Correct? Here you can enroll in our JAIIB Mahapack, as well as if you want hard copy of our books, you can enroll in our JAIIB Increment Box. Because now in this Increment Box, we are providing you around 9,000 plus online live classes, mock test, e-books, videos, and apart from this, books which will be delivered to you. Okay? Now in this, we are going to cover your conceptual classes, we are going to cover your crash course, we are going to cover your revision classes also. And along with that, all the mini marathons, maha marathons, all the class periods will be provided to you. So if you want to enroll in this particular batch, you can click on this buy now. And you can see if you directly go into pay now, you need to pay around 10,800. But before you click on pay now, let me tell you one coupon code. So if you use this coupon code, that is Y895, and if you apply it, you can see you need to pay around 9,800. Correct? So that is the benefit when you use the coupon codes. Remember, though we are providing you so many things on this platform, but as per JAIIB level, you need to clear your conceptual, you need to do your conceptual clarity. Because now IFBF, they are increasing the exam level. Okay, because recently in our May 25, they introduced the case study questions. For that, we need to make sure that our concepts are clear. So for that, you can enroll in this particular batch, and with this, we can assure you, we can help you in each and every concept so that you can clear in your first attempt. Chaliye. So with this, now I'm winding up this session. Thank you everyone for joining. Take care and bye-bye.